Welcome to the Safe Wheel live stream, where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trade system for free. I want to make sure that you guys hear me okay, so type in the chat that you can hear me. I want to make sure my audio is working. And be sure to post any questions that you might have, because I'd like to get to those before I end the broadcast, so I always want to answer all your questions. All right, so let's talk about the earnings edge from last week. You can see here, let's see here, sounds good. Yeah, you guys are telling me it sounds good. I appreciate that. Thank you. All right, my audio is working. Okay, so earnings edge, you can see my account number value here, $9,265. And what happened last week? Well, nothing happened last week. This is Adobe. This is traded a couple weeks ago. I did not make a trade. And since I made my latest update back in October, my record is 14, 13, and 5. So basically a 50% win rate. And my average win, 945. Average loss, only $477. And if you recall, 2022 did 63%, where the market was down 20. And so far year to date, the earnings edge, let's see, what is SPY trading at? I want to get an accurate number here. Hold on a second. Let me put that in. SPY is 44469. Let me put that in. We'll get accurate numbers here. 444.69. All right, so year to date, earnings edge up 18.5. S&P is up 16.28% year to date. You can see since inception 2022, the beginning of 2022, up 93.7. S&P since January 2022, since the first day of 2022, the S&P is still down about 6.37%. Okay. So that's the earnings edge. Basically, nothing happened. There weren't anything that fit through all the filters. I've already looked at some of the earnings edge possibilities. It looks like there's a few stocks in there that might have some good liquidity. We'll see if they fit through the filters. All right, next, the Premier Level 5. Let's talk about that. What is going on with the Premier Level 5? That's this account here. I have $36,681 in the account. This is when you get where I would recommend you go when you want to get conservative. My record is 21 wins, 7 losses, 7 break-evens. I currently have now 3 open trades. And I started this on April 8th of 2022. I hadn't quite got this thing nailed down until the a couple months into 2022, and that's why I started a little later rather than on January 1st. And you can see it did from that time frame, April 8th, 12.2% versus minus 6% for the S&P. Let's see what our numbers are right here. 36,254. We are at 36,656. 656. Okay, so we're up a little bit from last week. Year to date, though, we're only about half of what the S&P is. But remember, the drawdowns are only about 1/4. So on a risk-adjusted basis, if you don't like a lot of drawdowns, this is the place to be. You want to be conservative with your capital and get a return and outperform the S&P 500, because that's what I've done so far, and that's what the backtests show. Then the PL5 is for you. Let's see here. You can see since April 8th of 2022, up 22%, where the S&P is up 8.85. Now, on the Premier Level 5, I'm actually putting together a masterclass, and I'm going to make that available relatively soon. I would say within a month. And so I look forward to that. I'm actually going to teach this thing. I'm going to teach you how to do it on your own, which is something I haven't done. I did do it in my mastermind, but that was only with about 8 to 10 people. So now I'm going to actually make this available. All right, so that is the Premier Level 5. Let's get into the Safe Wheel. I'll look at the account first. that out, bring in the account and the safe wheel. As you can see, the safe wheel has started with $5,000. Now it's $6,475. $6,475. So you can see how the safe wheel outperformed in 2022, up almost 22%, where the S&P was down close to 20. And so far this year, we're underperforming here, up about 6.4%, where the S&P is up 16.2. So in this bull market, or maybe that's what's going on, you know, but still, if you don't see the large drawdowns, if you don't draw down with the market, you just hold with the market or actually make money, and then maybe you don't outpace the market when the market's going up. Well, look at the overall totals, up 30%, where the market's down minus 6.37% from the beginning of 2022. So vastly outperforming the market. I would say that the drawdowns with the system are about equal to the market. Let's see what I'm going to do today. I'm pretty sure I'm going to make a trade, because I do make a trade once a week in this account. Let's take a look at this. The first thing I want to do is look at my put hedge and make sure that it fits the criteria of not being under 100 days, which it's 151, so I'm good. And also the $30 strike needs to be within 70% of the price of 31.36 is the current price. I know that's within 70%. So I don't need to move my put hedge. It's good. Nothing needs to be done there. Now, as far as my long call, I've been rolling those long calls on Fridays. So this call was purchased on Friday, and I'll roll my long call again coming up on Friday. So there's nothing to do there. Now let's get to the traditional wheel. It looks like I own 100 shares, and my cost basis was $30.50. I know it says 28, but it's $30.50. So I'm going to try to sell a call, covered call, at $30.50 or higher. I'm going to take a look, and I want to do it in the nearest expiration cycle, the one that expires at the end of this week. I'm going to make sure I'm in the right stock, right? DKNG. Go to the trade tab here, DKNG, and I'm going to go into the nearest expiration cycle here. And I want to sell a call, so I'm going to look at the calls. And it's going to be at least at $30.50. And I want to get at least about $30, $31 for the call. So I can get, so I always like to, what I like to do is I can do this $37.40. I can get maybe 38 cents for this at the $32 level. But what I can go all the way down to the $30.50, and I could sell this one. So which one do I choose? Well, what I like to do is take the one that I can get into. This is the 32, and then go back one. So I'm going to go to the 31.50. I'm going to collect here, because then I'll make money if the stock gets called away, and I'll make pretty decent money even if it doesn't get called away, like it didn't get called away last week. So I'm going to sell the 31.50. I'm going to sell one of those. If I have between $5,000 and $10,000, I would do one of these and 3 put hedges. So I'm going to get as much as I can for this. I'm trying to get $59 for it. And let's see what happens when I execute my trade live. 58 maybe. Okay. So filled at 58. So now I have my wheel going, where I own the 100 shares and I sold my covered call. There's really nothing else to do with the safe wheel. So next I'm going to get into any questions that you guys might have. Oh, also don't forget to hit that like button. Just move your mouse down there and hit the like button. I'd appreciate that a lot. All right. Today I happen to run the live stream at a different time. I'm not going to do this again. A family member had surgery, and so I had to move the live stream time from 7:15 a.m. to 10 a.m. But that's not normal. I'm going to be back at 7:15 a.m. next week, and consequently, you know, from then on, it's always going to be at 7:15 a.m. All right, let's see if I have any questions here. Everyone's telling me that the audio is okay. Walter says there's a little bit of an echo. Tyler, I notice you have a bond and the PL5 system. Do you typically have your extra cash in bonds or T-bills? I'm currently rolling 13-week T-bills for my extra cash. And the answer is yes, I do. I could buy stocks or bonds. It's called return stacking is really the kind of, I think, the technical term for it. I call it double dipping. And that's one of the things that when you're trading the Premier Level 5, you're using span margin or portfolio margin, and you can, in essence, double dip. In other words, if I have $100,000, I could buy $100,000 worth of bonds, and then I still have around over $95,000 to trade options. So it's like as if I have almost $200,000 with the PL5 system, the way that it works. So I'm able to add leverage. And when I add leverage, I'm not going to take a lot of chance with that. I'm going to just buy bonds. That's what I've done. So the answer is, to answer your question, basically is yes. And it's called return stacking. All right, I don't see any other questions today. So I'm going to go ahead and work my way through to end the broadcast, unless I see any other questions pop up. All right. Well, one thing I always like to say, oh wait, here we go. Tyler says, thanks, you're welcome. And then Peter talks about here, filter 3. He's probably talking about the earnings edge. Often encounter high bid-ask spreads, even in the S&P 500 stocks. Do you think there's a difference in trading platforms? I use tastytrade. No, I don't. I don't think there's any difference. Maybe with Robinhood, some of those, possibly there might be a slight difference in the bid-ask spreads because they are, they make their money from the bid-ask spreads rather than commissions. But I think everyone's pretty much on the same page now. They really don't force you to pay commissions anymore. And so the bid-ask spreads are probably just a tiny bit wider than they used to be, but they're pretty liquid. And I don't think there's a difference between platforms. I've used another one called Dash Prime and Thinkorswim, both platforms at the same time, and also Interactive Brokers. I've used it at the same time as I used Thinkorswim, and I didn't see anything significant going on between the bid-ask spreads of anything. Joseph says, thanks, you're welcome. And Mui says, why do you choose to sell the 31.5 instead of the 32? Well, I want to collect a little more premium since I have the opportunity to. It's not often that you own 100 shares at a certain strike at a certain level, and then the stock is trading above that level. And so I want to take advantage of that just a little bit. So I'm going to take a little more premium than I can, but I'm not going to sit right on top of that 30-50 strike. And I'm going to be further out, so that way if I get called away, I make money both ways. But that is a little discretionary. I mean, if you feel like you want to do the 32, I wouldn't be opposed to that at all. Steve-O, high speeds right after the market opens. Maybe wait an hour or so before trading. Okay, so you're talking about liquidity and the difference between platforms. Yeah, I'm not sure about right at the market opens. Things can be a little bit weird for the first few minutes. Yeah, I don't disagree with that. All right, Peter says, thank you, you are welcome. Okay, so I'm going to move towards ending the live stream here. One thing I always like to say, if the P&L is not real, what else are they trying to conceal? All right, I'll be back next week, 7:15 a.m.